Hello, I am Caroline Rell, the lead manager of the Premium Brands strategy at Pictet Asset Management. I am happy to share with you our outlook for 2024. In many years, 2023 was a year of contrasts. Many parts of the world experienced high inflation and sharp increases in interest rates implemented by central banks, resulting in low consumer confidence and fears of a global recession. In addition, geopolitical tensions and long-lasting wars contributed to an unstable environment. At the same time, and on a more positive note, China stopped its zero-COVID policy at the very start of the year, resuming Chinese demand for aspirational goods and experiences after a long period of restrictions. In this context, premium brands have proved resilient once again thanks to their global exposure and superior desirability in the eye of the consumer. Record growth and margins were actually a highlight for many of our companies in the past year. So what about 2024? As economic growth is likely to remain muted overall, we expect a normalization of growth for our premium brands. This normalization is actually quite healthy, going back to previous run rates observed in the past 15 years, where our companies were able to grow profitably and generate value for shareholders. We identify three main drivers for premium brands in 2024. First, we expect sales growth to be driven by Asia. In China, the high spenders have led the recovery already in 2023, but the middle-income consumers, who have been slower to recover economically, will come back in the coming year and will contribute to overall strong Chinese demand. The rest of Asia looks promising, with consumer confidence and economic activity improving, helped by incoming tourists who have already started visiting countries such as Thailand, Japan, or Korea. The US will continue to decelerate after exceptional growth in recent years. And in Europe, premium brands should be benefiting from a resurgence in tourism, as levels of visitors are still well below the peaks of 2019, especially from Asian travelers. The second driver in 2024 is the exceptional financial strength of premium brands. Contrary to many companies that could be struggling with a high cost of debt and muted demand, premium brands stand out as best in class with their strong balance sheets and continued cash flow generation. The luxury and hotel segments will continue to benefit from their strong pricing power and travel trends globally. Tourism, group, and corporate travel are set to contribute. In sporting goods, cosmetics, and food and beverages categories, we expect inventory levels to come down and reach healthy supports. Cleaner inventories and reduced promotions should generate an improvement in gross margins and an acceleration in earnings. Given the healthy financial situation of many premium brands, 2024 could be a year of mergers and acquisitions, as stronger companies could partner with weaker candidates in need of financial or strategic help. The third driver into 2024 for premium brands is valuation levels. With price-earnings ratios below 10-year averages for most companies in our investment universe. This offers good opportunities to invest in our highest convictions ahead of what could be a period of decreasing inflation and lower rates, a scenario that could boost consumer sentiment globally. In the longer term, we remain very constructive, as consumer aspirations support our investment thesis for premium brands. Premiumization of spending will continue, driven by rising purchasing power of middle-income consumers, notably in emerging markets. The need to express one's identity is another long-term trend, in particular for the younger generation, eager to share on social media what they do and the brands they like. Finally, the search for experience and well-being has only accelerated in the past 3 years. People seek more than ever before a balanced life with positive emotions and exceptional moments. Premium travel, sports and leisure, as well as natural beauty products, are rising trends. So, in times of slow economic growth and geopolitical tensions, our companies tend to show resilience, gain market share, and benefit from their financial strength. We will continue to apply our disciplined investment approach to build a high-conviction strategy and create value for our shareholders in 2024. Thank you for your attention, and goodbye.